Personal loans can also help improve your credit mix because, of course, as we know with your credit mix, you have revolving accounts and you have installment accounts. Installment accounts usually end in the word loan. So personal loan, auto loan, mortgage loan, those types of things, okay? Which is another factor that affects your credit score overall. One of the best ways to build your credit is to simply... In this video, we're going to talk about the impact of personal loans on your credit score. Let's get right into it. By the way, if you're looking to increase your credit score, qualify for homeownership, we can help you just like we help these other people as well. To learn more, click in the description below or scan this QR code. So how does applying for a personal loan affect your credit score? Okay, so number one, when you apply for a personal loan, the lender will conduct a hard inquiry on your credit report. Some of you all may know this as like a hard pull. As we know, there's a hard pull and a soft pull. A soft pull or soft inquiry is not going to affect your credit score. However, with a hard pull, it most definitely will. A hard inquiry can cause your credit score to drop by just a few points, but don't worry. Hard inquiries only stay on your credit report for about 2 years. And the closer that it gets to the 2-year expiration date, the lower the value it has on your credit score anyway. Okay. The impact is usually temporary, and your score should rebound in about a few months. Okay. Because it's only a few points. When you apply for a personal loan, the lender will need to check your credit history to see if you are a good risk. They also want to get more information like your income, how long you've been in your job, and a few more things as well. This will involve a hard inquiry, as we just mentioned, on your credit report. And as we just talked about, a hard inquiry can cause your score to drop just by a few points. But again, the impact is temporary. Most scoring models only consider hard inquiries from the past 12 months when calculating your credit score anyway. Okay. Also, if you haven't done so already, be sure to like, share, and subscribe. Now, how can personal loans help you build your credit? Okay. Making on-time payments on your personal loan is one of the best ways to build your credit. Okay. On-time payments account for 35% of your credit score. Personal loans can also help improve your credit mix because, of course, as we know with your credit mix, you have revolving accounts and you have installment accounts. Installment accounts usually end in the word loan. So personal loan, auto loan, mortgage loan, those types of things. Okay. Which is another factor that affects your credit score overall. One of the best ways to build your credit is to simply make on-time payments. Now, it doesn't have to be a personal loan. This is just the positive side of what a personal loan can do outside of obviously debt consolidation and things like that. Now, this includes your personal loan payments as well as your credit card payments and other loan payments. Okay. Making on-time payments shows lenders that you're a responsible borrower, and it can help you improve your credit score over time. Personal loans can also help you improve your credit mix, as we just talked about, okay? Such as revolving accounts like credit cards, like I just mentioned, and of course, installment credit, which is anything that ends in the word loan. Having a mix of credit can help you improve your credit score overall. Let us know your thoughts inside the comment section below about what you think about personal loans as well. Now, how can personal loans hurt your credit score? Okay. Now, this is very important information that a lot of people don't know of. And that's obviously is going to start off with missing payments on your personal loan can severely damage your credit score. OK, late payments can cause your score to drop by as much as about 100 points or more. OK, defaulting on your loan can also have a negative impact on your credit score overall. Now, while personal loans can help you build your credit, obviously, if you're making your payments on time and you're using it not to make new debts, but preferably if you're taking that money and then paying off some debts or consolidating some debts, they can also hurt your credit score as well if you're not careful. Okay. Missing payments on your personal loan can severely damage your credit score. Late payments can cause your credit score to drop by as much as 100 points or more. Okay. Defaulting on your loan, which means failing to make payments altogether, can also have a negative impact on your credit score and can stay on your credit report for up to 7 years. But like I mentioned, just with the increase as well, with personal loans or any account, as it gets closer to the expiration, okay, so inquiries expire in 2 years. Bankruptcies are going to expire in 7 years, and a chapter 7 is the only one that's going to stay on your credit report for 10 years. Outside of that, everything's going to stay on your credit for about 7 years if you're not trying to get it removed by disputing or something like that. but as it gets closer to the expiration period, it's going to have a lower value as well. Okay. So it's something to keep in mind. I know for a lot of people that's credit conscious about their scores, what they can and what they cannot do, but this is how it's going to impact you the most. By the way, if you're looking for a personal loan recommendation, this will be my first one, and this is going to be upstart.com. Now, Upstart, to learn more about them, you can scan this QR code right here in front of you. Now, their credit scores that they take is about 580 or higher. Upstart typically looks at things outside of your credit score, okay? That doesn't necessarily mean that you're going to be declined or approved automatically. They're still going to look at things. But most personal loan companies are going to look at the basics, like your income, how long you've been on your job, things of that sort. Upstart's going to look at some things outside of what's on your credit score. So I would say start off with them first, okay? The next option is going to be with a company called upgrade.com. Now with Upgrade, they're going to take a little a credit score that's a little bit higher, about 620 or higher, okay? To learn more about them, you can scan this QR code as well. But those are the first ones I would say start off with. And then here are some additional personal loan options as well. Now, if you guys have been watching me for quite some time, this list kind of changes because some companies change. Some companies go out of business. So some companies buy out other companies. Some companies change names. Avant.com, they've been around for years. Happymoney.com sounds crazy, but they used to be payoff.com. I don't know why they changed their name to Happy Money. Sounds kind of sketchy to me, but it's still a legitimate company. Lendingclub.com, American Express personal loans, Discover personal loans, and SoFi.com. So those are going to be great ones to start with. And these are all soft pools. Okay. So that means that you can see what your terms are, see if you can get approved with no impact to your credit score. If you do get approved and you decide to move forward by choosing a loan option in the terms, then they will do the hard pull because by that time you decided that you want to move forward. But if you just want to see what you can get pre-approved for, or if you're going to get approved in general, you can try any of these options, but start with the first two to start off with, because those are a little bit, I won't say easier to get. Those are going to be ones that I've seen people get approved for as well, but you have plenty of options to go by. Thanks again for watching, and be sure to go ahead and like, share, subscribe. We'll see you at the next video.